Renée van Heusden, head of oil and gas industry at the World Economic Forum. Please, a big hand to Renée. Welcome. And yes, just have a seat. And then let me call up Sean Metcalfe, Associate Director, Oxford Economics, leading global economic advisory firm. Sean, yes, welcome. And Gerard Ostheimer, the CEO of the Molecule Group, drives policy outcomes for sustainable fuels, chemicals, and materials. Welcome, Gerard. Welcome. So these will be presentations, right? And I guess we start with Renée. If you, no, Sean, you want to kick it off? Oh, that's right. Yes, Sean. Yeah, we talked about that. Good. So either you can do it there or you can be up there as you wish. And there's that little télécommande that you can use.
Thank you very much. All right. So just make sure this slider clicker works. Oh. Okay. Hi, everyone. Thanks for having me. So in my remarks, I'm going to do some scene setting by zooming out a little bit and assessing the overall competitive position of European manufacturing as a whole, rather than focusing specifically on the refining sector. In doing that, I hope to provide some useful context and framing for some of the more kind of refining-focused discussions that are going to follow. So, over the last couple of years, European manufacturers have lost competitiveness against the US. So, in looking at this problem, there are, I think, three kind of important dimensions we see as contributing to that kind of loss of competitiveness. Firstly, the post-Liberation Day hikes in US tariffs on European exports have made them obviously more expensive in the US, which has eroded the competitiveness of European exports in the US market. Secondly, the euro has actually appreciated against the dollar over the past 2 years as well. Again, eroding the competitiveness of European exports by making them more expensive for importers, of course. And lastly, you can see in the chart here that kind of productivity growth relative to the US and Europe has also disappointed, which has further eroded that competitiveness. And I think the important thing that this kind of chart illustrates is that a lot of the other kind of main manufacturing players have gained competitiveness in the US market despite the introduction of tariffs. So on that far right-hand side of this chart here, you can see quite a lot of the kind of East Asian players have made important inroads in terms of their competitiveness in the US over the last couple of years, particularly countries like Taiwan, India, Indonesia, Vietnam. In most cases, it's currency depreciation that has kind of helped to offset the effects of tariffs, but it's also to an extent represented by important gains with respect to productivity. Of course, the enormous surge in AI investment has been an enormous boon to kind of electronics-oriented Asian manufacturing economies like Taiwan, for instance, and that has helped them kind of boost their competitiveness over the past couple of years as well. Now, I think another kind of probably more significant dimension to the European competitiveness debate is the fact that we've lost competitiveness against China over the last couple of years. And I think that's a really important driver of kind of some of the recent weakness we've seen across European manufacturing. I think there's a few reasons for that. I mean, firstly, the makeup of Chinese industrial goods increasingly overlaps with the EU's. China has moved up the value chain, which makes it a closer to competitor to Europe across its kind of external and domestic markets. Secondly, in becoming kind of more self-reliant across a range of kind of high value-added sectors, Chinese demand for European exports has also softened in some sectors as well, particularly automotives, which has been a big constraint on the European, particularly the German automotive sector. So it appears that Chinese gains in some of these sectors have come directly at the expense of Europe in some of these sectors like electrical machinery, and the automotive sector. And these falling export market shares have mostly coincided with falling output levels for European manufacturers. Obviously, an important dimension of the kind of recent loss of manufacturing competitiveness is also the cost of energy, and that's really apparent if you sort of strip out the relative performance of really energy-intensive types of manufacturing in Europe versus all the other types of manufacturing. You can see there's a very, very stark contrast, particularly since 2021, 2022, when we saw the kind of the withdrawal of a Russian gas supply, which obviously led to a very sharp increase in gas costs. Of course, those gas costs have come down, but they've kind of stabilized at much higher levels than we saw prior to that. And so that has had a sort of led to a kind of lasting deterioration of the kind of energy competitiveness of European manufacturing. And that's kind of, weighed quite heavily on energy intensive types of manufacturing. Of course, higher gas prices, because of the way power markets are sort of structured, has also led to a lasting rise in electricity prices in Europe as well, which has further eroded the position of kind of electricity intensive forms of manufacturing as well. So, I mean, some kind of suggest as a response to this that scrapping carbon pricing is a sort of way of addressing Europe's structural energy cost disadvantage. Our analysis suggests that scrapping carbon pricing wouldn't necessarily do lots to help vast swathes of European industry. Um, Obviously, carbon prices have increased quite sharply over the past few years, but a lot of the energy intensive industries within Europe have been spared much of the headline costs of carbon, um, because of the large volume of free emission allowances that have been allocated. So on the chart on the right hand side here, you can see that for some of these industries, the volume of emissions allowance they've been allocated actually kind of exceeds their actual total level of emissions. And so, it's quite, we don't necessarily view this as being a very large determinant of the recent underperformance of European manufacturing. Of course, that may change with the kind of phase out of ETS allowances and the kind of the phased introduction of CBAM. That the kind of the extent to which carbon costs increase is likely to go up over time. But there's obviously a lot of uncertainty about the kind of specifics of how and when that's going to be phased in at the moment, which is an important source of uncertainty for energy intensive industries in Europe. Just moving on quickly, defense spending is obviously a very key offset to quite a challenging external environment for European manufacturing at the moment. Um, so, clearly in the data, we can see that, defense spending has led to an increase in certain forms of manufacturing. So types of manufacturing most closely linked to defense spending, like weapons and ammunition production, have clearly increased very sharply. And on the right hand side here, you can see that whilst investment in weapons and ammunition has increased, the extent to which kind of order backlogs have increased has also kind of ensures a healthy pipeline for production, and that currently there's quite strong evidence that that European sort of defense manufacturing supply chains are struggling to actually meet the level of demand at the moment. So there's quite a large chunk of unfilled orders at the moment, which should ensure that over the next couple of years there's quite a healthy increase in production levels in kind of types of manufacturing linked to the defense sector. Of course, that generates positive spillovers for kind of the upstream supply chains across Europe as well, hopefully. So, sectors like capital intensive industries like metal products and certain types of electronics and the like, and certain forms of transport equipment as well should benefit from that offsetting impetus from the defense sector. Thus far, it appears to be quite sort of country specific, and we see Germany as providing the kind of lion's share of the impetus on the investment front in Europe at the moment. So you can see on this chart here that Germany, which is represented by the red line, is really kind of outperforming the overall Eurozone with regards to our kind of business investment forecasts. It's really set to be the kind of major outperformer in terms of business investment across the continent. But I think it's important to note that it's not necessarily a lasting boost to investment. It's quite narrow, it's short-lived and sort of sectorally concentrated, that investment. It's not necessarily a lasting phenomenon, is how I would caveat that. Despite the headwinds facing much of the European manufacturing sector, we do see some sectors providing sort of offsetting support. These include other transport, which mostly reflects the aerospace industry, pharmaceuticals, and the food sector. defense-linked sectors and are also among those with positive investment intentions, as well as those kind of more linked to the sort of AI investment boom as well. In contrast, kind of more cyclical sectors like motor vehicles show kind of little appetite for expanding capital expenditure overall in the current environment. So the overall kind of composition of investment spending in the Eurozone is maybe becoming a bit less sort of demand driven or cyclical, and being more driven by industries that are sort of more connected from the overall kind of business cycle. So if you look at sort of survey evidence that look at the kind of drivers of investment spending in Europe, it's not really being driven by the need to expand capacity. It's more being driven by factors like replacement and new product development. And that makes sense, I think, given the fact that overall sort of demand in the region is relatively weak and there's quite a lot of spare capacity in the manufacturing sector. So you can see that, the sectors that are more correlated with GDP and the business cycle are those that aren't necessarily doing the investment in this environment. It's those kind of more that are disconnected and have maybe more sector specific dynamics that are doing kind of more of the investing in this environment. So I guess to summarize, the competitive backdrop is a relatively challenging one. We have higher energy costs. We have a strong euro against the dollar, rising competition and weaker demand from China, and also higher US tariffs that have all been a cocktail that has made it quite a challenging environment for European manufacturing competitiveness in recent years. And we don't necessarily see those headwinds materially abating over the next couple of years. European manufacturing continues to face an uphill battle, I think, is the sort of moral of the story, particularly some of the more energy intensive industries like chemicals, like refining. At the same time, we see pockets of strength within European manufacturing, including sectors like metal products, which will be a big beneficiary of the defense spending upsurge, as well as aerospace, which is benefiting from strong demand and a backlog of orders which will support production. And I think on the far left here, you can see that pharmaceuticals is another area of strength within the European manufacturing context at the moment. Though I would caveat that the kind of figures for the European pharmaceutical sector are somewhat inflated by Ireland's role as a tax haven for US multinational corporations, which tends to inflate the figures to some extent. So I think I will leave it there.
Okay.
Okay.
Great. Sean, hang on one second. I got a quick question. There was a slide where you mentioned
Sure.
about scrapping carbon pricing would not have that big of an effect.
Yeah.
Can you explain that a little bit? Because at the moment we're debating a lot about
Yes.
ETS,
So-
emissions trading.
I think that our climate research team wrote a piece about this recently where they sort of attempted to quantify the extent to which carbon costs are an overall share of total costs for European manufacturing. And I think they found that carbon pricing, when you factor in the free emissions allowance, are about 0.5% of the value added production of European manufacturing.
I see.
In contrast, it found that energy costs as a whole are about 8% of the value added of manufacturing. And so energy costs are a very significant constraint on manufacturing. But we think that to date, carbon pricing is not necessarily a huge chunk of that story. Now, of course, with the phase out of the free allowances and the introduction of CBAM, carbon prices are going to go up. And so I think it's going to become a more significant,
Right.
but a potentially more significant constraint on economic performance moving forward, depending on how things are phased in and whatnot.
Okay.
If that makes sense.
Great.
Yeah.
Sean, thank you very much. Let's move on to the next presentation from Renée. I guess we go to Renée, right? Renée at the World Economic Forum. You're ex-ABN AMRO Commodities Energy Risk Assessment, so a lot of good background for that. You've done a study on the future of clean fuels, right? And there's this energy trilemma, right? Security, affordability, sustainability, and how you address that. Please, Renée.
Thank you. Thank you so much. So we go back to the fuels component, and thank you so much for the macroeconomic context, which is something we are all navigating. So let me test this is working. Yes, there we are. Thank you for having me. Absolute pleasure and honor to join you today. And I've been invited to delve into the outcomes of the World Economic Forum's research into the future of clean fuels. But the big question is, Renée, can you offer us a outside looking in lens? So what are some of the case studies we've been looking at outside of Europe, and what are some of the lessons we can draw from that? But let me start with a broader frame. And again, the context, because context really matters. And why does this matter to clean fuels? And we believe, and I think many of you in this room will think the same, clean fuels really sits at the intersection of this frame of the three key pressures that every energy system is experiencing and has to navigate simultaneously. It's decarbonization, it's affordability and competitive energy, which is impacting industries, as Sean just showed, and security of supply, which we just heard from our honorable guest from NATO. But the challenges, they tend to not pull into the same direction. So hence you have an inherent tension in your policy making towards an effective energy system. And what makes clean fuels actually strategically relevant is that they address all these three pressure points at the same time. On the one hand, they reduce emissions. On the other hand, they are compatible with existing infrastructure, something that is overlooked but should really not be underestimated because it matters for affordability and the speed of transition. And they diversify supply. Because in the end, come 2050, whatever scenario you're looking at, fuels will continue to play a critical role in the energy system. So we need to bear this in mind. And hence, as was already mentioned this morning, they are strategic economic assets and not just a climate instrument. So maybe very quickly on the future of clean fuels. It was launched not that long ago, actually with the leadership of Repsol, for which we're very, very grateful. It was launched in 2025, and although Repsol has played a phenomenal role, we have moved to already 45 organizations across producers, across off-takers, financiers, and policymakers, because that's the heart of the forum, to be cross-stakeholder. And the aim is to look at unlocking the acceleration of the deployment of clean fuels as a practical lever for the transition. It was established because the sector is facing really some structural challenges that no single actor can solve, hence the cross-sectoral engagement. It is navigating very complex and rapidly changing value chains, fragmented policies, and a chicken and egg challenge between supply, offtake, and infrastructure. And business cases that, as we see today, remain incredibly sensitive to both regulatory concerns and market conditions. So although there might be a supportive policy in place, the scale of deployment that is needed has still to materialize. So coordinated action, we believe, is really the bridge towards that. And hence our design is cross-regional, cross-sectoral, per definition, to be able to do that. Because the barriers, and hence this outside-looking in lens, they do differ depending where you are located. But nonetheless, comparing what has worked across different contexts is one of the most useful things we can do with our research and what we're trying to bring to you today. In its relatively short existence, very quickly about the outputs, and these are publicly available, so happy to hear your thoughts, but also happy to share. The first output that we have produced this year is a quite simple white paper, but it's really to lay out the land of clean fuels from a market dynamics perspective, from a solutions perspective, and a case study perspective in terms of policy, what actually works. In addition, and this is live, so do come forward if you have ideas, we have a digital playbook. And the function of the digital playbook is to inspire, to give case studies, what has worked in different regions, and most importantly, why has it worked? They are all available, so really, really do reach out if you're interested. But delving a bit into the different regions and the regional context. This map shows something that is maybe not underappreciated in this particular room, but very often underappreciated in the debate. Supply potential and demand centers are concentrated in different parts of the world. South America is very well positioned from a net exporter, high yield crops, existing logistics, and actually a proven track record, quite mature. North Africa and the Middle East, on the other hand, have abundant renewables resources and, of course, direct access to key demand markets both in Europe and in Asia. And North America is this big player that can play both on the demand but also on the production side due to relative market maturity, but also already planned investments. And frankly, in the context of today's fragmentation, to really understand these regional dynamics are essentials to being able to articulate a policy that is relevant and impactful. very briefly on Europe and the US. Both are key demand centers, what you see here. But really from a Europe perspective, why is it the demand center? On the one hand, it's policy driven, clear mandates. It is a net importer also from a feedstock perspective and fuels, with main domestic potential being a bit limited to waste resources and specific regions. Think about the Nordics and Iberia. So really that regional dynamic and that context will be essential for Europe to be able to articulate an industrial strategy, which we believe is really essential in order to be effective. But let me turn to the point why I'm here, and that is really looking outside in. So we're crossing the Atlantic, and where we see really a region standing out is Latin America. And where you see that already is in terms of the relative share of clean fuel investments, which for Latin America stands at 5.8%, which is well above the global average of 1.3%. And the case we would like to make is that this is not an accident. It reflects years of policy coherence, infrastructure investment, and public-private coordination, and a particular champion has been Brazil. What it also shows is that investments follow the conditions of investment. Quite obviously, you need the economic framework for investments to flow. So it is about mandates, clear mandates, but it's also about the alignment of incentives, predictable policy environment that will attract capital. The mandates are there in Europe, undoubtedly. The question we have to ask ourselves is that the broader European investment conditions are matching that ambition level. Let me delve into Brazil, because Brazil really is the clearest proof point that sustained policy coordination actually translates in real supply side skill. Because biofuels already today account for roughly around 30% of Brazil's final energy consumption. And this is a structural shift, it's not a marginal contribution. And the lesson is, again, it's not about mandates alone. It's about the system of mandates, policy incentives, and infrastructure, and how they work together. For example, ethanol and biodiesel blending requirements, they give producers and distributors a long-term demand signal, critical. But also from a decarbonization credit mechanism, which in Brazil is CBIO, that provides a market-based revenue stream for producers. From a financing perspective, they have relatively low interest rate finance from the Brazilian Development Bank, which reduces the project financing costs. In addition, they have tax credits under the Rota 2030 system that is supporting the flex fuel vehicle adaptation. And finally, very significant, relevant infrastructure investments, such as the Logum Logistica ethanol pipeline network that is connecting at scale supply and demand. What is essential is these components don't work in isolations, they work together. So the value of the Brazilian model is its coherence that has been sustained over time. And that is what makes the economics work. It lets the investment flow. Final point on Brazil, it's not for nothing, because if we look beyond the decarbonization and the more systemic context, it is the biodiesel and the bioethanol sector provide 1.5 million jobs, both direct and indirect, in Brazil, 70% of them in rural areas. On the climate front, approximately 65 million tons of CO2 equivalent is abated around on an annual basis, which is around 3% of Brazil's overall emissions. That is a result also from a displacement of approximately 200 million barrels of oil equivalent on an annual basis, which has a hefty sum, depending on the sum of the price today, which I don't know, but it's quite high and volatile. And these are not side benefits. They are central to why the policy has been sustained across governments, and most importantly, across governments of different affiliation. They've had quite some political change, but this has been a red thread. So it's about energy security, employment, and economic development that form the political economy of clean fuels. And when that case is made, actually the system is quite durable. Why these numbers matter for Europe is they show what happens when you frame clean fuels as an industrial policy, not purely a climate instrument, which was also highlighted this morning. To wrap it up, very quickly, what are some of the lessons for Europe we believe to bear in mind? Europe's policy framework is very, very strong and it's a genuine asset. But deployment is not at track. And strong policy without an investable economics will fail, as we all know. And it will not move projects, which is critical for that. Secondly, which was already addressed, there is import dependency, which is really, really real. And acknowledging that is a starting point. Third, as was just shown in Brazil, coordination really works. The Brazilian case is a template to really be taken into account. Finally, focus on what is market ready. A lot of the existing infrastructure can be leveraged and a lot of existing advanced biofuels can be actually scaled. And the final point is look at the policy holistically. It is not a climate discussion alone. It is a strategic asset, as was mentioned this morning. And I hope the Brazil case makes that point quite clearly. Thank you.
Thank you, Renee. One sec. One quick question. Davos this year happened, of course, just before the Iran war started. How much were you talking about fuel at Davos
A lot.
then? Really?
Yes. Actually, we actually had a public session on fuels as well, which is visible. So do look it up.
Yeah. So the upshot was what at that point?
Sorry?
What was the upshot? What was the result of that?
It was actually quite the message that we're trying to make with the report now and then, because the writing is on the wall, because we already had the Ukraine invasion. Which
Whether you have a war or not, right? Is this still
the
not that?
uncertainty, because Davos happened before the Iranian war happened, but we were already entering a space of geopolitical and geoeconomic fragmentation.
Yes.
So the sovereign question of energy security and energy sovereignty was already very much high on the agenda. So I actually think in that regard, the impact was quite limited, and fuels was really recognized as a critical component in the energy debate.
Right. Very good. Okay, Renee, thank you very much. Have a seat. And hopefully we can get to some questions. So think about your Slido for questions. I might even run the mic out if somebody wants to get bold and say it straight to us, direct to us. Let's move to Gerard. Gerard Ostheimer, CEO Molecule Group. Yes. Drives policy outcomes for sustainable fuels, chemicals, and materials by shaping international commitments, advocating for standardized market rules. Gerard, please.
Good afternoon, everybody. Sorry. Many thanks to the invitation to be here. Apparently, Luis Cabra wants me here to be provocative, which fortunately comes naturally to me, which also explains why I didn't put anything on slides. So there's been some discussion in the United States press that maybe Zelensky is the leader of the free world, but I would nominate Prime Minister Carney from Canada. And it's really shocking to think, speaking of WEF, that was only 4 months ago or 5. I mean, so much has happened since then. But Mark Carney made a remark that we're undergoing a severe rupture at this time that I think really resonates with people's minds. But he also said something that I think has not gotten as much attention. And this is the corollary to the fact that we're living through a genuine rupture, a rupture of energy relationships, of security relationships, of trade relationships. And what Mark said is that not only is there a rupture, but that middle-sized countries, Europe, Brazil, Australia, Japan, South Korea, etc., have to admit that they were coasting behind the U.S. leadership. And now that the U.S. has lost its fucking mind, we have to admit that it's not possible for you all to coast anymore, because that security quid pro quo is gone, right? And with it, the trade quid pro quo, right? So the trade was, you kind of let the U.S. do what it wants, but then it keeps the seas working. Interestingly, the country that still wants the law of the sea is actually China. Not between Taiwan, but that's another story. So what I want to say, though, is, so given that corollary that it's middle-income countries or medium-sized countries need to now lead, how can they do that? They can do that by creating, if you will, microlateralism, right? So we went through a hyper multilateralism in the tens, and then we had COVID, and then we had Trump. And so that has blown up multilateralism, and now we can have microlateralism. And I really want people to think deeply about what that means. What that means is creating a balance between sovereignty of X, which is the European, that's what I've been hearing the last few days that I've been around Europe, is, well, we need this sovereignty and that sovereignty, et cetera, et cetera, et cetera. But what you should do is you should create that sovereignty through high functioning partnerships. And I think that an underutilized mechanism is a number of international processes, right? And when I think of those international processes, I'm thinking about the OECD, I'm thinking about the Clean Energy Ministerial, I'm thinking about the International Energy Agency. And some of you might not have heard of any of those things. But there are these processes out there that can provide mechanisms to take the international understanding and project it into the European context. Because you might be surprised to learn that at the technical level, so if you talk to technical experts at the International Energy Agency, if you talk to technical experts at the International Renewable Energy Agency, there is unanimity. There's not even consensus. Everybody understands all the key phrases. Stable policy, all of the above strategy, supply chain, thinking deeply about where you're going to source your carbon, and ensuring adequate sustainability. And if you talk to the international space, and if we think specifically about bio-based fuels, they all acknowledge that we now have 15 years of experience with sustainability certification. And that experience with sustainability certification is a strength to the bio-based industries. And it's well past the time that the bio-based industries need to be asserting that strength. It is incomprehensible that we are discussing food versus fuel in a region that is long on calories. German farmers been in the red for 3 years, not because they're underproducing, but because they're overproducing. India started its biofuel journey where it wanted to get to 20% of ethanol plus or minus 10 years ago. Because of the focus on producing biofuels and the investment that Indians have made, they now are also overproducers of carbohydrates. And so the lesson, and then we go over to Brazil and the United States, we have everywhere in the world is overproducing carbohydrates. And the lesson is, even in an emerging market context, we could produce more. So we could have more alcohols as a feedstock. And if we have more alcohols as a feedstock, well, we can get to anything because we have smart chemists in the room, right? It might not be the cheapest thing, but we can get there. And so there was so some of the conversation. So I was asked to give a perspective on sort of the outside looking in Europe. The perspectives that are sort of confusing to the rest of the world is the focus on vegetable oils. That's really, really confusing. And I understand it because there's a longer history of diesel use on road, et cetera, et cetera, et cetera. But then you skip a step. You go vegetable oils, shoop. Now we're just going to do nothing but Title IX advanced hoobajubes. And you're sort of skipping the entire ability of sugars and starches to be turned into just about anything that you want. And so you might want to rethink that. And then let's return to the other theme, which is building relationships. So you could build relationships to sugar producers, new or sort of existing and future. So there's a long cultural connection between north-south connection between Europe and Africa. Right now, Africans are underproducing agricultural products. Why? Because they can't compete on price. Because the price is so low that German and American farmers can't make a profit. And so what do we need? The answer to this is not more supply, it's more demand. Right? So we need more demand for the fuels and the chemicals that can actually come from carbohydrates. And so the biggest barrier there is the perception that there's something wrong with using crop-based fuels. And so I think Illy from Copa Cogeca, I think I said it right for the first time. She was very clear that we need to build an entire advocacy chain. And I support that immensely. So we need an advocacy chain that supports all of our supply chains. And so what does that mean? We need to unleash agriculture, and then we need to do that by creating demand. And so I just want to finish by making some sort of geopolitical 101 type statements. All right. Well, first, actually, sorry, I got lost. Okay. So what I really want to say is that going back to Mark Carney, the way forward is to build these relationships and make them functioning relationships. So the connections should, in a sense, be green corridors. And so I'm actually helping the government of the Netherlands achieve their goal of generating feedstocks for their chemical sector. So if you don't know, the Dutch government has been doing a very nice job in the European context of arguing that we should be bringing in feedstocks in order to green and decarbonize the chemical sector in the Netherlands. But then what does that look like in the current balkanized world? What that could look like is that the Netherlands could set up a bilateral relationship with Brazil. And that bilateral relationship could involve detailed determination between those two countries where they build trust in the sustainability. So instead of trying to create a global solution to the issue of indirect land use change, Brazil and the Netherlands could develop a very concrete, very specific, very confident relationship on how they think about what is actually the carbon intensity of the feedstocks coming out of Brazil and going into Rotterdam. Similarly, you could imagine doing that between Australia and Japan. And my last point will be that, and eventually when you build that trust, in some cases, you will have to move materials. You will have to ship things. But where we want to end up with, particularly as we look at sustainable aviation fuel and sustainable marine, is we need to not be trading in physical entities, but we need to be trading in environmental attributes. And I know that this is very controversial for some people. Some people call it book and claim. But we need to figure out a way. And my proposal is that the way forward is actually not trying to create a global book and claim, but instead trying to establish these strong, trustworthy relationships. The critique of that is that might be further balkanizing, but I don't think that's what's going to happen. I think what's going to happen is once we start showing that you can have these trustworthy relationships, say between Australia and Japan, say between Australia and Singapore, say between Ireland and Germany, once you have that trust, then those can serve as models that will allow the creation of the microlateralism that Mark Carney wants us to get to. Thank you.
Very much. Yes, obviously. We have a little time. Are there any questions? You could put them in Slido, or just raise your hand and I'll send the mic out to you if you have any question or comment. One question I have for Gerard is, there's a G7 meeting next week. Do you have any hope that something could come out of that? No. I mean,
not this year.
There's next year.
I'm excited for the G20 in the UK.
Ah, and why?
I think that the United States will be a different country by January of 2027. I think that there will be a different political reality. And I think that there will be elements of the government, not the executive branch, but that will remind us of what it was like when we had the Inflation Reduction Act. Right. And so I remember the panic in Europe in 2024 after the Inflation Reduction Act, when suddenly there was actually a enabling policy coming out of the United States, because then there was the direct fear that industries were just going to pack up and move to Iowa, what have you.
Right.
But no, I think that the fact that the G20 is in the UK is going to be very interesting for the fuel sector. The UK is thinking deeply about SAF. The UK is thinking deeply about maritime, and it will create a lot of opportunity to elevate some of the ideas that this community is so fluent in.
Any other comment on the panel on G7 next week? No. Yep. Renee, please.
No, as a joke. Being based in Geneva, I'm fleeing the region. But I agree. I think the hopes are for those that don't know, the G7 takes place in Evian, which sounds like France, but Geneva is the closest airport. Not ready to manage that. So do not come to Geneva next week. That's my message. No, I don't. I wanted to make the point on the micro multilateralism or the polyamorous multilateralism, which I've also heard. I think there's not necessarily something wrong about that. Multilateralism, for having a North Star, has been very good over the last few decades, but it has become very complex because global value chains have been integrated across different themes, across different topics, and across different borders. So the recognition that maybe micro partnerships are just more effective might actually really be a good way forward.
Good.
But in a global context.
And look at the fact that we've had the Paris Agreement for 11 years. And the Paris Agreement led to a lot of ambition and a lot of goodwill, but very little practical action. And in fact, because of the lack of governmental action, we've had a selection of non-state actors like the Greenhouse Gas Protocol that have had to fill the void, because without governmental guidance on how you calculate carbon intensity, suddenly now we have like all this scope 1, 2, 3 stuff that it's a mess. And you have literally, I mean, we complain about unelected bureaucrats in Brussels, right? GHG Protocol is the ultimate unelected, self-appointed bureaucrats. And if you're not familiar, so obviously I come from the bio side, but I want to point out that if you're not familiar with the Greenhouse Gas Protocol land sector removal standard, you need to get up to speed on this, because it will affect negatively everything that relies on agriculture, textiles, bioproducts, biofuels, etc. This is a gun at all of those sectors' heads, because they basically proclaim anything from the land as killing us all. And so, and I'm not even exaggerating. Sorry, go ahead.
Okay, let's go to that question, please. You can stand up and give your name and title, please.
Alex Cass from BP. Thanks very much, Gerard, for your talk on biofuels. It's very rare to hear something that positive on biofuels here in Brussels, so please come more often. Can I ask you for another outside-in view? Because several in the industry, in the biofuel industry, are trying to make intermediate crops work. We don't seem to be getting much traction with the European Commission in a lot of member states. So, what are we doing wrong? Because it ticks so many of the right boxes, and now also, as unfortunate as the geopolitical situation is, you'd think it does help unlock some of the alternative energy sources, but we don't seem to be making any progress with the European Commission making very, very strict rules that are hard to implement in practice. And then, if I may, one comment to Sean on the ETS analysis and on carbon costs. I think it would have been nice to see a refining perspective, because I do appreciate there are some sectors that receive a lot of free allocation. I would gently dispute the conclusion that carbon costs don't play a role. They do play a huge role in refining. And of course, as you alluded to, if you look at the current state of things, they don't tell you anything about what you're expecting in 5, 10, 15 years, which is your investment horizon. If you plotted refining on one of the charts that you showed, you'd see that carbon cost exposure in refining is massive.
Sean, did you want to comment on that at all? Are you good with that?
Yeah, happy to comment on the second one. So yeah, thank you for enlightening me on the refining point, which was excluded from my analysis. Yeah, I think it's fair to say that the extent to which industry is been impacted by carbon costs is quite sector specific, because as I showed in my chart, some industries have received quite a large volume of free emissions allowances, whereas in your context, as you've said, the extent of provisions has not been as generous, which has been quite a big constraint on the refining sector. So yeah, I accept that qualification. Yeah.
Okay. Yes, go ahead.
Well, sort of regarding the benefits of bio-based fuels, chemicals, and materials, something I omitted to say is that there's parts of the world, Thailand, Australia, should be Argentina, Brazil, United States, Canada, where people are just very comfortable with agriculture and crop production, and something that's just happening, pun intended, organically, is that, sorry for that, but is the fact that even you would be perhaps surprised at how focused everybody is on regenerative agriculture everywhere. And I would say that it's a truism that if you're doing well, then you have the ability to focus on sustainability. You can think deeply about your soil quality if you're making a profit. And so until recently, farmers were making profits, and so they were thinking deeply about how they could make more profits. And so they became attracted to green industries. And in these countries, Brazil and the United States, which were really hesitant to embrace sustainability restrictions, now they realize that sustainability requirements can become quite empowering and can actually generate additional income. And the biggest driver of that was California, right? And so the market created in California really set the stage for companies around the world to think about engaging, and it really has driven the carbon intensity improvement of fuel production in the United States. I don't think I answered your question. What was your question? No, I'm serious. I think I forgot did I get to it or? Oh, the intermediate crops. Right. Sorry. Yeah. So you can blame the Brazilians in second crop corn because they've completely muddied the waters. Okay. So the issue is that something that comes up in sustainability all the time is the issue of definitions and clarity on definitions and clarity of roles. And so why can't we just call it a cover crop? But I don't know. I mean, because there's the issue of second crops from the same land, which are happening in the same growing season. And then there's the issue of what would be called cover crops, where you're actually using the same land, but you're growing out of season. And those should be treated differently. But the Brazilians have confused it because they've learned how to grow corn recently. And so in terms of getting traction, whether I'm talking to Hannah and Kai at Bayer, or whether I'm talking to you, or I'm talking to BASF, these are difficult questions because of the antipathy to agriculture that we find. I mean, I don't think I'm surprising anybody, but there's just this antipathy to agriculture here, or let me rephrase that. Antipathy to industrial agriculture here that you can trace through GMO, you can trace through various issues that is disappointingly not technically sound. And so I think it's I don't know how to answer your question, but I think you can see all the things that make it complicated.
Okay, good. Renée, is there anything to add to that? Because part of your study was about Brazil, and is there something that we in Europe can learn from that and apply?
I guess no one is perfect, including Brazil. No, I think in terms of the agricultural expertise, I cannot even get close to this. Nothing to really add. I I I think there is the only thing I would add is actually on your last comment of the technologically not fully sound, although I didn't fully grasp it. But the point is quite critical because I think to the point made earlier on advocacy, um, I think it's not about necessarily the advocacy. It's about how do you embed technological expertise into policy making. And I think that is a bridge that has not been solved and I think has gotten weakened over the last few decades. So I cannot say anything intelligent on what you just shared, but I think that is a component that I've heard throughout the day, that in the policy making and how to bring technological expertise from those that do it on a daily basis into the system is something we've lost to a certain
So,
extent.
and why? Why? And how do we bring it back?
That's a very good question, actually.
Ah, maybe Gerard's nodding.
Go for it. Go for it.
No, so I mean, so Tom Nichols wrote a book, The Death of Expertise.
Huh.
This resistance to expertise that is pervasive in many societies. It's obviously pervasive in the United States. I hope that it doesn't. I mean, I would have thought that a pandemic would have brought us together, but it didn't. And so I would hope that we don't have to have a genuine crisis that requires a deeper crisis that requires a technical response to rebuild trust in technical proficiency. But the problem is that climate and sustainability have become very emotional, and they've gotten away from their technical roots. And so this actually brings me back to the point that I tried to make at the lectern, which is that in order to make progress, we should be connecting to the technical experts at the international organizations that have relationships to the WEF and to the Rocky Mountain Institute and Environmental Defense Fund, even among NGOs outside of Europe. So there are people that acknowledge the need for carbon solutions. And so there's an energy out there. There's a very practical energy outside of Brussels. I would say you find it in Repsol in Spain. You find it in Italy. And so seeing the tension in Europe is sort of mimicked by this opportunities around that you see in these other companies that are sort of long on carbon, if you will.
Mhm. Okay. Actually, Sean, let me ask you, because I think you are in the process of working on a new study or something with Fuels Europe. Do you want to mention something about that?
Yeah. So part of what our company does is assess the economic contribution of different industries. So as part of that, we're working currently with Fuels Europe to assess the economic contribution of the European refining sector. So that involves, calculating the extent to which it contributes to overall GDP on the continent and how it supports activity along its supply chains as well in terms of the upstream and downstream linkages. So I imagine that report will be shared with the membership when it's complete,
And
which
that
I think is in August.
in August?
Yeah.
Okay. Just a little bit of a teaser there. Any other questions before we possibly wrap it up? We have a question back here. Yes, please.
Thank you. My name is Greta. I work for Heusden.
Can you stand up so we can see? Oh, yeah.
We
Please.
are Brazilian ethanol producer
Oh,
here.
welcome.
I was hesitant if I should speak here or not,
Yeah.
because Alex was right that it's a very rare discussion we have in Europe, but Gary was right that whenever we go out of Europe, it's a very normal conversation. And indeed, we speak about biofuels from Brazil as one of the solutions that the world can learn from. My question is to Renée, because I saw in your analysis you did not mention one element, which is the first generation biofuels in Brazil, which is very different from Europe. So I'm just curious if that's on purpose and what's your take on that? Thank you.
Accidentally on purpose. No.
That's a good question. So it is included in the analysis. with the time constraints that I had, I wanted to focus on the policy cross-learning components, but it is included in the report. So I'm happy to find you afterwards to get you to that report.
Okay, very good. I think we can wrap this up.
If I-
in time.
I would-
Yeah, go ahead.
I would make one more.
Gerard,
I would
please.
make one more point. And so, yes, we've been talking a lot about the bio-based fuels, but one of the projects that I'm working on with the Clean Energy Ministerial is highlighting the synergies that can occur between bio and e-fuels. And if you're interested in SAF, then you're 100% interested in green hydrogen. And one of the themes that has emerged in the ministerial is that we should really be thinking deeply about the relationship between electrification and then the production of molecules. And so over the last 4 years, what we've seen is the Clean Energy Ministerial has grown from being almost purely electronista to where we now have considerable discussion of fuels and chemicals. And then there's the realization that we need this holistic approach. And so again, I really was happy to hear this morning this discussion of this sort of advocacy chain. But I would go beyond that, and we should. I think we might get some more traction in our own advocacy if we think of the interlinkages that exist between, say, e-fuels and biofuels. And a simple example is, when you ferment something, you get a very pure CO2 stream. And even in the United States, there are incentives to convert that CO2 stream into a product. And so the more that we can show that there is a entire new energy system forming, and that the solution is actually to strengthen the linkages, the sooner we will get off of a purely fossil sourced energy system. Thank you.
Thank you, Gerard. Electronista. Was that your coining? It was.
That's old though. That's the
would-
copyright expired already.
What would Daniel Ortega say about that? Anyway, thank you very much to Gerard, to Renee, to Sean. Big hand to them. Really great. Very informative. Thank you.